Welcome back to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages.
Yeah. How you been, man?
Good.
Yeah?
Yeah, it's been a while. Summer just flew by.
Yeah. It's been it was a good summer for sure.
Yeah.
I know we were both busy and to be honest, sweater weather.
Yeah,
like,
already.
dang, today like there's nice, a little bit of rain, temperatures dropping a bit. Like I think it might be my favorite time of the year.
Oh yeah, fall time.
Yeah.
We still got some hot weather ahead though, apparently.
Yeah, it's definitely not over, but the fall days are nice.
Yeah.
Like today was my first drive to work where it was like dark.
Oh yeah.
Yeah, so it's like I notice it now. Like the drive, the commute, and the
Yeah.
daylight hours are definitely shortening.
Yeah. When I take my dog for a walk in the morning, it's like pitch black now. So yeah.
So, but that's good. Maybe the weather should just absolutely crater on us so we can just feel better about hunkering into our desks and working because there's a lot of work to be done
exactly.
right now.
Especially with rates dropping. And
Rates are dropping. We're switching mortgages around. Keeping up on rates for all the clients and for the most part we like it when the current lender that we have the client already approved with drops rates in line with everybody else and we just keep floating down that rate with that existing lender. But there's definitely scenarios where a change makes sense.
Yep.
Assuming the timeline allows for it. We still got 3 weeks or something till possession. But like that's been my morning today is calling clients. Do we want to change? Is it worth a savings of $68 to make this change and kind of reapply a little bit of pressure for the next 2 weeks on you guys? So lots of that conversations, but that's what we do.
Yeah.
For sure.
And I mean, sometimes it's not going to make sense for them because we're going to need updated documents most likely and have to go through all that process again.
Yeah.
And some people that inconvenience might not be worth $30 a month or whatever the case may be.
Yeah, for sure. But it's nice that we have the capacity and the team around us to have those calls and make that decision. I know that a lot of people just don't have that luxury.
Yeah.
And once a mortgage is done and fully approved, like they just have to park that one aside and focus on new items only.
Yeah.
So I would just say that's a super big point to focus on.
Yeah.
When you're working with a mortgage broker.
Yeah.
Make sure they have the capacity to keep working for you.
Yeah, exactly.
Until the finish line.
Yeah.
So.
Even if they are a part of a big brokerage, that's not the same as having like the team aspects
for
we
sure.
have going here, right?
Yeah.
Internal underwriting, dedicated assistants and document specialists. And all of that. You're not just a single broker working for a big team of other brokers.
Individuals, for sure. Yeah. No, it's an important thing I would always look for. But hit the number.
Yeah.
Almost. But the last 2 weeks, 3 weeks, you might be you're taking the lead. Your optimism might pay off.
Yeah, and I was shooting really high at the beginning of the year.
Yeah.
But we're getting close.
Yeah, we're getting closer. We're right in that now rates are in the below 4.5 on a lot of mortgage types, not necessarily refinances and 30-year amortizations and things like that.
Yeah.
But there's a lot of rates that are definitely in the 4.4s, 4.3s.
Yeah.
So anyway, it's great.
Yeah.
It's great to see rates coming down. This is definitely one occasion where I don't mind being wrong.
Mm-hmm. Yeah.
So I think my original estimate was in the 4.79 range.
Right.
So higher 4s and you took higher 3s.
Yeah, like I said that we were going to be in the low 4s for a standard, and then there would be a promo that would push us into the high 3s.
Yeah. So that's looking really good.
Yeah.
That's looking really good.
So we're there, almost there.
Yeah. But I think the focus of this chat today, is about rate, and there are the grouping now between 3-year fixed and 5-year fixed is tighter than ever. We have some options, 3 and 5 are almost exactly the same. Actually, I think I saw a rate promo this morning where the 3-year is actually basis points below the
Yeah.
5, which is wild.
Yeah.
So, and then we have to talk about the variable, the variable rate, with, 3 consecutive Bank of Canada rate drops and 2 more forecasted for this year,
Yeah.
before the end of 2024.
Yep.
And then another 5 to 6 still on the books for 2025.
Yeah.
There is a analysis paralysis epidemic right now.
Yeah.
We have to be communicating these options to our clients,
Yeah.
as clearly as possible, because they all have benefits. There isn't, I don't think, a bad decision.
No.
Like, if the 3-year fixed is now below the 5-year and more people kind of come onto that trend, I would say we can almost rule out a 5-year fixed in a lot of cases.
Right.
But we throw the 5-year variable into the mix, and that's a definite conversation that is really taking up a lot of families' bandwidth, and what are we going to do?
Yeah. One thing I found interesting is that there is obviously so much interest in the 3-year that we've now had lenders create 3-year products that didn't exist before, which is crazy that they've had that much impact that lenders are like, okay, we got to get in on this or else we're going to miss out.
Yeah, for sure.
Because that seems to be the discussion, is most clients are wanting the 3-year or the variable.
Yeah, for sure. So, right now where the variable rate sits, we're in the mid 5 range, 5.5.
Yeah.
And a fixed is going to be now below 4.5.
Yeah.
So there's now, as of this week, now we're back up to like a 1.25% spread.
Yeah.
Up until recently, it was a lot tighter than that, and the variable definitely had a lot of appeal. Because if that 5.5 now turns into 4 or 3.75 by the end of 2025, that person will come out ahead over the 5-year term, over a 5-year period of time. But that's not a guarantee.
Right.
So that's why I say that there's no wrong answer, because it's just as much a financial decision as it is a personality match.
Yeah.
And if that program of rate drops doesn't hit, are you going to be okay with that?
Right.
And then, or are you going to be stressing, making you need that to happen?
Right.
Yeah.
Yeah.
So yeah, there's lots of that going on, and it's really fun. I love working those numbers out, and giving people as much data to inform them before making the decision. So yeah, that's been it's been a heavy part of my work schedule lately.
Yeah.
Is really giving out those numbers and forecasting and also like kind of nerfing those numbers. If the Bank of Canada is forecasted to go 7 more times, let's say, what if only 5 hit? What if 4 hit?
Right.
And on most mortgages, if some on the 4th rate drop, you get to par comparing to a fixed rate. The 5th is now kind of bonus and upside.
Yeah.
So knowing where that tipping point is,
Yeah.
and knowing that it doesn't need to go the full distance for you to benefit,
Right.
knowing those numbers is really important.
Yeah. But there's also the kind of X factor of what will the fixed rates be at that time? Because if they continue to drop, then you lock in after 3, if there is only 3 more drops, you could still be a lot.
Yeah.
Ahead.
So that is the other biggest, there's 2 other big benefits to the variable rate. The first being you can convert your variable rate mortgage into a fixed rate mortgage with the current lender at any time. And
Penalty free.
And penalty free, and they'll make that flip for you.
Yeah.
They may not offer you the industry best rate because you're already an existing customer,
Yeah.
but all signs are pointing to it being better than it is today.
Yeah.
So, you could be watching that market over the next 12, 24 months, and then when it levels out at a number you're happy with, lock that in.
Right.
The broker now should be getting involved at that point and saying, okay, you can take that bank's fixed rate offer,
Yeah.
review that with your broker. That is critical, because if, let's just say that now the bank is going to offer you 4%, they're going to lock you in at 4%.
Mm-hmm.
Great. Well, what if another bank is offering 3.69?
Yeah.
This is where the broker comes back in and reviews what that penalty will be to break that
Yeah.
current variable rate mortgage, which is going to be 3 months interest.
Yeah.
That's an easy calculation to figure out. And then is the savings between 4% and 3.69 enough for you to save more than what that penalty would be?
Right.
So, and those penalties up until about $3,000 is capped into the new mortgage amount. You don't have to come out of pocket to pay
Yeah.
that penalty, which is, kind of convenient. If you can pay it, do it.
Yeah.
But it can be rolled into the new mortgage balance.
Yep.
So yeah, there's math to be done at that point too. It's review the current fixed rate offer from your existing lender, and then see what the rest of the market is offering on now new business.
Yeah.
If you make a change to a different institution.
Yeah.
So that's great. That's one huge benefit, and I think the second one was the 3-month interest penalty.
Yeah.
It's easy to calculate. It's 3 months. In the current month, you want to break that mortgage. We piece out what the principal pay down is and what the interest piece of that payment is. Multiply that by 3,
Yeah.
and that's your penalty. Okay, so that's really easy. If you lock into a fixed rate and rates go down, which we are saying they are,
Yeah.
your penalty can get quite large.
Yeah.
On an average 6, 7, 8 times what the 3-month interest penalty could be.
Right.
So some as high as, depending how far fixed rates go, it could be as much as 1.5% of the mortgage balance owing.
Right.
So this is when you get into like the $16,000, $20,000,
$25,000.
$25,000 penalties.
Yeah.
So if you take the fixed rate, I would suggest you just remove yourself from the mortgage market for the time being.
Yes.
For that period, that 3 years, you chose that rate because it suited your needs today.
Yeah.
The payment is lower today than the variable rate.
Yeah.
And you really have a strong, you're putting a lot of value on stability.
Yeah.
That's why you're going to go with the fixed rate.
Yeah. You're no longer playing the market anymore.
No, you're saying that I am going to forego a little bit of upside on the variable for stability.
Yeah.
And I cannot fault you for doing that.
Yeah.
Like, I think that's a great decision, especially if rates are in the 4.5 range. Like up to 2 years ago, they were over 6.
Yeah.
So it's already come down and historically averaged all interest rates in Canada over a few generations. 4.5% is not a bad rate.
Yeah.
When you look at history.
Yeah.
So
It is crazy to think about this short-term history that we've experienced just in the past couple of years, to go from like 1
Yeah.
to like 5.7 for an insured all the way, and then now it's coming back down. Like, it hasn't been a very gradual process.
It's been fast.
Yeah.
It has been a very much a sharp ride.
Yeah,
So-
big time.
So yeah, but rates versus house prices, there's going to be a lot of differing opinions on that. That's going to get a lot of input from your realtor.
Yep.
On what they think house prices are going to do in your region.
Yep.
I would say that's huge to focus on, because a lot of the news we're going to get is still out of Toronto,
Yep.
and what the housing market's going to do and what they're projecting, on that front. House prices might remain neutral. They don't think that if rates come down, prices are going to skyrocket.
Right.
But I think a lot of realtors will tell you that.
Yeah.
They're going to kind of give you that little fear of buy now.
Right.
Prices are going to, jump again as soon as rates decrease. But that might not be true for where you live.
Right.
Alberta, I do think that prices are going to continue to rise a bit. Calgary already saw it.
Yeah.
Huge price increases.
Yeah.
Edmonton, is going to follow.
Yeah.
I think. I don't know if I would say huge price increases, but definitely increases.
Yep.
So yeah, waiting another year you will capture likely better interest rates than today, but you could pay more for that house.
Right.
So understanding that balance is important.
But there's also the discussion to be had of inventory. Like if you are in a better position to qualify because of interest rates, so is everybody else.
Yeah.
And so you could be battling a lot of people. And so if you find that the home that you like and get that opportunity, like you should probably take it. That's where we could strategize on the variable to get better rates in the future if you want to play that game.
Yeah. Most of the math I've run does show that paying a little bit more on your interest rate now will be less than the forecasted home price increase. So I agree. I would say that it keeps you, especially if you're in the rental market, rents have gone up here. Like, you're building equity now in your asset. If the house price is going to go up 5, 6, 7% maybe over the next 12 months, why shouldn't you benefit from that?
Yeah.
There's a lot of factors, but I personally believe if the right house becomes available, you should buy it.
Yeah.
Like I don't think that waiting will make you happy.
Right.
But
I would agree.
that's regional. I would say that that's in our region.
Yes.
I think that that's where we live. This is the bulk of the business we do is where we live.
Yeah.
So,
Yeah.
yeah. So, that's a great ending point. And I think another topic too, but banks we have a couple great options that are really helping homes with legal and even non-legal suites.
Right.
So if you're in that position of, wanting to buy, but you don't need a full house, you're maybe not at the point of having kids or you actually have parents that you want to, cohabitate with.
Yeah.
There's some pretty good improvements, I would say, over the last year to how we're able to use that legal or non-legal basement suite to offset and increase your buying power.
Yeah.
So, and that is, I think, from bank to bank to bank, a massive margin in how they're calculating rental income to offset your costs.
Yeah.
So if you are in that market and you've maybe been declined or maybe have not reached a pre-approval amount that you're happy with your current institution, definitely talk to a broker because there are massive differences in what certain banks are doing on rental offset treatments.
And it could be a situation where now we're not talking about lowest rate because that lender might be just 0.1 or 0.15 higher, but with their rental offsets, we can get you approved for more.
Yeah, now it's not 400, it's actually 475.
Exactly.
And it's a totally different house.
Yeah.
Yeah, so exactly. And then it's definitely not necessarily a rate conversation.
Yeah.
It's a making sure you get the house you want and don't feel like you've outgrown it in 3 years.
Right.
Because buying and selling real estate isn't expensive. Well, selling real estate is expensive. Legal fees, realtor commissions, and stuff like that. So we always want to see people get into the house that's going to have a likelihood of long-term, use. That's another big one I've really noticed.
Yeah.
Is the massive swings in rental calculations.
Yeah. And there's even some now with doing purchase plus improvements for the rental suite and using that potential rental income in the future to qualify for more.
That's right. Until recently, you could get funds to renovate your house, make improvements to the existing house.
Yeah.
But those funds couldn't be used to build a legal suite.
Right.
So now they can. And like you said, that potential future rents will be added to help you qualify today before the suite is built.
Yeah.
So that you're right. That was a nice addition there.
I feel like it's cool to see when the lenders, insurers try to do things like that to help.
Yeah.
Just like I mentioned with the 3-year products that they've never had before, and it's interesting.
Okay, that just made me think of another awesome thing that changed. So we had one bank for sure, and I think a few more will follow. This is also new, but if you jointly own a property with a sibling or a partner or somebody, and now you're applying for a new mortgage on your own without that original partner. Previously, you would have to, as an individual, debt service that whole mortgage.
Yeah.
The banks aren't worried about that person because they don't know that person, and they can't speak to what happens if that person decides to not pay their portion of the expenses.
Right.
So you would be qualifying and debt servicing that whole load.
Yeah.
We now, I saw a note literally yesterday or the day before, where they're going to allow a little bit of a break on that calculation.
Nice.
So that they'll understand that there is a partner on that property, and we're going to assume that they're going to hold up, their share
Nice.
of the debt. So I will do some more digging on that because it just literally came across.
That's huge.
Yeah.
Huge.
Yeah. So maybe that'll be a topic for the next episode
one,
on just
yeah.
exactly what that means. Because I know there's a lot of people that have added a cosigner to qualify for their first purchase and now are moving on.
Yeah.
So that was another great thing. So I guess the point is, without digging too much into that one, because I don't want to say something that isn't true today, the point is that banks are looking for angles and niche products that are going to help them really, service a market that is currently not being serviced.
Yeah.
So we are seeing innovation and product creation from banks, and so that's exciting.
Yeah.
I think they're all really fighting for market share, and they are looking at where gaps are.
Yeah.
So I think that's great for our industry and for buyers in general. So
Yeah. It's good.
Yeah.
Good times.
yeah, I think it's gonna be a great year. I think we're gonna see a lot of people, hopefully get into homes, assuming builders can keep up and inventory becomes available.
Yeah.
Yeah,
Should be good.
yeah, cool.
Leave it there.
Yeah,
Excellent. Thanks for watching.
yeah. Thanks.
See you next time.